We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
You got to have the why, and we know our why. So
you don't need to reinvent the wheel.
Yeah.
Millions and millions of people have done this already. You can get help. You can get a roadmap. You can save a lot of time, money, and frustration. Welcome to the Value Add Podcast with K&K.
So we're going to jump right in. Today's topic is the current lending environment. And what I want to dive into with this particular subject is just kind of an overview of residential and commercial, like what's going on and what's not going on, because there's a lot of that too. And also, I'm going to dive in because I think a lot of people right now, as Krystle, you're getting the calls too, and I'm getting, but they're different, is people are saying, should I refi? Should I wait? What's going on with rates? You think they're going to go lower? Is there a benefit to refi? And I kind of was going to give a couple scenarios that will probably be snippets, and you can see them in an email or on Instagram, or just listen to the podcast here.
Nice plug.
So anyways, Krystle, let's talk about the current lending environment. So if you guys caught our, we had a great podcast with Grant Cardone, and you listen to anybody that's like a syndicator, a lot of people are saying financing is going to come back in anywhere from like 60 days to 120 days, you know? Mm-hmm. And when I'm listening to things, there's definitely some things loosening up. There's definitely some rates coming out that are becoming very attractive, that are getting now people that a month, 2 months ago were like, yeah, we're not going to do anything. Now it's starting to make sense to refi. So can you kind of jump in of what's starting to kind of break through a little bit? And then what you kind of, when you think things are a prediction of things loosening up, and what would be loosening up that's tight, that's making problematic in lending right now?
Sure. So first off, I think that podcast with Grant Cardone was super helpful. That being said, I think when Grant talks about that stuff, it's important to note that these are for larger deals. So in the bigger deal space, when you're usually getting agency debt, I get that those loans are super unattractive because the agencies are, for the most part, still requiring mortgage payments to be held back for 6 to 12 months minimum. So that is unattractive to have your cash tied up because you have to make that payment on top of everything. They did just get rid of the requirement to hold taxes and insurance.
There's that. Okay.
Which is cool.
Because honestly, that could be a lot of money it's
a good amount of money, but it's still a lot of money to hold back your mortgage payments, and especially if the property's demonstrated really good collections, and there's so much government assistance out there. So I think that I can understand where he came from with that. So as far as our deal size, I would say the average deal size for us, we're generally in the more like 1 to like 5-ish million range, maybe some bigger deals. Those deals are generally done through banks, especially where we're at in Southern California. It's a bigger market. It's more competitive.
California
There's
in general.
A lot of really competitive lenders here. So the banks, for the most part, have started coming back. I think probably everywhere you go, you're going to see that there's a couple of very competitive lenders, and then everybody else is still kind of trailing behind.